Good evening, everyone. A warm welcome to this session. I'm Rashmi from Great HR and today's moderator of this session. First of all, would like to thank you everyone for joining this session today. And to talk about today's topic, as you all know, we are at this time of the year where all of us are busy looking for various ways on how to save tax, right? Hence, here Great HR has come up with this webinar, that is Parichay Webinar Series, Proof of Investment Submission. So today we are going to discuss everything about POI submission soon in some time. But before that, let's do a little housekeeping on how the session goes. So the instructions of the session remain as usual. That is basically the session is divided into two parts, wherein in the first part, we will be having a thorough discussion with our today's expert, Mr. Anurag Jain, which will then be followed by audience Q&A. So I can say audience Q&A is where time is all yours, dear participants, because that's when you can put across all your questions in the Q&A option of Zoom control panel, and we will be happy to take it up and answer them here. Also, the session is currently being recorded. So if happens to miss out on any part of our today's session, don't worry. This session recording will be shared with all of you once the session is done. Now, without any further delay, let's begin. Like I already said, every year, salaried professionals or employees have to submit investment proofs so that their employer deducts the correct amount of TDS, right? TDS as in tax deducted at source. So employers in India are required to cut TDS every year, and they might deduct more or less tax than necessary if the correct investment proofs are not given. But why is it necessary to submit proof of investment? What is the process for the submission of the same, and what happens if we fail to do that? So in the next 1 hour, we are going to discuss this in length with our expert CA Anurag Jain, co-founder and partner ByTheBook Consulting LLP, and understand proof of investment submission in detail. But before that, again, let me tell you a little bit about Mr. Anurag Jain. Anurag Jain is a qualified chartered accountant with more than 15 years of Big Four experience in advising clients on tax, social security, and immigration matters. Prior to co-founding ByTheBook Consulting LLP, Anurag had a diverse experience in working with PwC, BMR, KPMG, and Deloitte. Anurag has advised larger and medium multinational clients on employee secondment arrangements, compensation structure, equity incentive designing, and time-to-time support to clients on tax and social security litigation matters. The recent experience includes advising companies on assessing the impact of new labor codes. So, Mr. Anurag, we are very happy to have you here in the session. Welcome to this session again.
Thanks, Rashmi. Thanks for having me.
All right. So I think with this now we are going to head towards our first round. That is, we are going to have a good amount of discussion with Mr. Anurag. Mr. Anurag, here I have a few questions which I'll be asking you, but I would request you to enlighten us all about the proof of investment today.
Sure.
Yeah.
See, as you rightly highlighted, the employer has the onus. So whenever they make the payment of salary, they are required to deduct TDS. And what we in our professional circle always say is TDS is not supposed to be TDS. So a little housekeeping, a little bit of knowledge about what kind of compliances are supposed to be put in place, how your payroll needs to be managed, what are the responsibilities of both the employer organization as well as the employees, and then encompassing the entire aspects into policies and procedure. That is what this entire aspect is all about. Yeah.
Sure, Mr. Anurag. So in that case, let's start with some basics then. Anurag, please help us understand what is the difference between exemption and deduction as per Indian tax legislation?
Yeah, so if I speak more so from the technical perspective, and I would like to keep my language as layman as possible, because I understand that there will be people from the HR background as well. There will be people who are employees of an organization and who are willing to understand what exactly are these different technical jargons all about. So just to put it very, very simply, exemption, if we talk about exemption is totally different from deduction. Exemption is something that your income per se is not treated as taxable income. So I'll just give a very, very small example. We come across this component called house rent allowance. Now we know whenever we make a payment of rental to our landlord, and in case we are a salaried employee, then there are certain exemptions which are applicable to us. So what happens is that whatever is the amount of rent that we pay, again, depending upon whether a person is staying in a metro city or a non-metro city, they are eligible for certain exemptions. So per se, what happens is the company pays HRA, but that entire amount is not treated as taxable. A certain amount can be claimed as exempt depending upon the proof which is furnished by the concerned employee. So that is an exemption. Deduction is something which is treated as a deduction from your taxable income. So let's suppose there is a salary income, you're earning a basic salary. So basic salary is fully taxable in the hands of the employee. Now, when we do the tax computation or when the payroll is being processed by the employer organization, then they would take into account certain deductions as well, which will in turn help in reducing your net taxable income. And these deductions can be in the form of the savings that you make, in terms of certain expenditure, in terms of certain donations as well. So primarily, there's a fundamental difference between both the things. Exemption, to put it simply, is not a taxable income at all. Deduction is a sort of like deduction from your taxable income and ends up reducing your tax liability to that extent.
Sure, Mr. Anurag. Thanks for sharing that with us. Our next question is, what is this investment declaration and investment proof? And what is the importance of these processes here?
See, typically, as many people join an organization, whenever they join a new organization or whenever an organization starts a new fiscal year, then people or the employees would have noted that they get this notification from the payroll department asking them to furnish a declaration. And that declaration typically comes in a form of Form 12BB, wherein an employer organization asks their employees to furnish that what is the kind of investment that they're planning to do this year. So that is what is called as an investment declaration. It's nothing but a sort of like declaration by an employee that these are the investments or these are the expenditure that they're planning to do. These expenditure and investments qualify for certain deductions as well as exemptions as well. And basis that declaration furnished by the employee, the employer organization and their payroll department basically processes the payroll. And when we talk about the payroll process, it's a simple way of basically inputting the compensation data, factoring in the income tax declaration, which is furnished by the employee, working out the tax liability, working out what will be the amount of PF, ESI, or the labor welfare fund, whatever is the statutory liabilities, and then basically working out the net take-home pay for the concerned employee. So that is how the investment declaration comes. Investment proof is what basically, because what happens is that the tax on the salary income is calculated on an estimated basis. Now, obviously, because it is an estimate, it has to be finalized by the close of the before the close of the financial year. So typically in the month of January, February, an employee is also required to furnish the proof of their investment, basis which the payroll department of a company will work out what is the final tax liability of that concerned employee. And whatever minor adjustments are required to be done, they do it and work out the final tax liability, which is required to be recovered from the employee. It can be an excess recovery, it can be a short recovery. So that's why typically this entire exercise takes during the what we typically call as JFM, January, February, March month, where an organization carries out the exercise. They take the investment proofs from the employees, they verify whether those proofs are eligible for necessary exemptions or deductions, and then they work out the final tax liability. So if any adjustment is required to be done, they do it, and then basis that the finalized tax liability is worked out.
All right. Okay. So in that case, Mr. Anurag, can you please share some insights on what are some of the common saving investment schemes according to you?
Well, there are many. Some are very, very popular. Some of them are something that people would have heard quite often. So, if you talk about the saving schemes, Provident Fund is one of those schemes. Public Provident Fund is another. National Pension Scheme is there. National Savings Certificates are there. Postal Savings Schemes, ULIPs, insurance is there. But these are sort of like investments that an employee can make. What they need to be aware is that there are certain expenditures as well which qualify for deductions as well. So expenditure can be in the form of a tuition fees if a person is paying a tuition fees for their children. And when we talk about tuition fees, it's a tuition fees being paid to schools or a university or any educational institution. It doesn't encompass or it doesn't cover the donation or the capitation fees. So whenever an employee incurs these expenditure, they have to be mindful that what is eligible for deduction, what is not eligible for deduction. Then similarly, nowadays we have electric cars is something which is quite a vogue. People have started purchasing electric cars. So when you buy electric cars on a EMI basis, the interest is also allowed as a deduction. So that is another good example of how expenditure can be allowed as a deduction when you are calculating your tax liability. So, and in terms of assessing which is the best saving instrument, it all depends upon a person to person. It all depends upon the profile of that person, whether he's an aggressive investor, whether he's a conservative, whether he would like to stick with the prescribed rate of return. So it all depends upon their choices. There's a lot of financial planning which needs to be done. And my suggestion has always been, don't wait for the end of the fiscal year to work out what are your sort of like investment avenues that you need to basically frame, but rather at the start of the fiscal year, plan that this is your salary amount, this is how much you intend to save, and this is how you intend to save or invest the savings in different instruments. So all in all, and at the same time, quite a few queries I have received from individuals is what is the difference between Provident Fund or NPS? Should they opt for either one of them? Or is it something that they can do it on a jointly basis? In this regard, my advice has always been, assess, because Provident Fund and National Pension Scheme are theoretically speaking a very totally different scheme. Both is being run by government departments only. One is being run by EPFO, the other is being run by PFRDA. At the same time, the structure of the scheme is quite different. Provident Fund is a very, very traditional instrument. It provides you an assured rate of return. It is something which is very popular. At the same time, it is something which is mandatory applicable on an organization. So any organization having 20 or more employees are required to get themselves covered. They are required to pay the employer portion of the contribution. Then an employee also has to make their contribution. And then EPFO is the body which manages the entire investments. Normally the interest is in the range of 8.1 to 8.5%, but you get a guaranteed rate of return. Whereas in the case of NPS, it's a sort of like a mutual fund, but at the same time with lesser amount of loading charges, with a lesser amount of admin charges. Taxability wise as well, Provident Fund can be fully exempt in the hands of the employee if certain conditions are satisfied. Whereas NPS is not fully exempt. There are certain parts, let's suppose 60% of the total corpus is allowed as an exemption, whereas 40% you have to invest in an equity. But all in all, both of these are retirement schemes. Both of these are good schemes. My advice has always been to keep both of these on your mind when you're planning your investment. One gives you a decent rate of return. NPS has been giving a good amount of return. Again, depending upon whether you are investing in an equity or a hybrid sort of thing, corporate bonds or government bonds. Whereas the PF always gives you a assured rate of return. Nowadays, we are seeing in media as well that NPS, there's a lot of focus of the government on ensuring that the NPS also gives a assured rate of return. So in the times to come, we are seeing that government is putting a lot of focus on national pension scheme. We are also seeing that in every year's budget, they come out with some amendment or the other, both for the government employees as well as private sector employees, making it more beneficial for employees to invest in national pension scheme.
All right. Thanks, Anurag, for sharing this very useful information. Mr. Anurag, besides these investments, does a certain category of expenses also qualify for deduction?
Absolutely, absolutely. And that is what I was talking about. Sir. When we talk about deductions, it is not simply investment in instruments. It can be expenditure like if you are doing some medical expenditure, you haven't basically taken any policy for yourself or your parents, and both yourself or the parents are basically qualifying as a senior citizen. Then also there is a deduction which is applicable. As I was telling, electric car is another popular thing that I'm seeing that many employees have now started opting for. Education, if you are opting for a higher education, then that is also something. The interest payment, you have taken a loan for availing that higher education, then the interest also qualifies as a deduction. At the same time, if you plan to do certain donations to charitable organization or a donation to political parties, that is also something that qualifies for a deduction under income tax legislation.
All right, that's great. So also, Mr. Anurag, would like to hear from you, as far as you have seen, what are some of the common mistakes while we submit our income proofs?
See, if we talk about submission of the investment proof, first and foremost, what I was telling earlier was plan what is the investment that you intend to make. Of course, all those plans have to be depicted in your investment declaration as well. The second thing is whatever investment you make, have the original documents, acknowledgement, receipts available with you, because these are the documents that you would need to furnish to your employer organization, basis which they would be able to work out the tax liability. The other thing is don't keep things for the last minute, because right now we are in the month of December. Many organizations might have already circulated those emails asking the employees to submit their proof. They would have provided a certain time window within which the employees would be required to submit this proof. My suggestion is always don't wait for the last minute, because the server gets also busy and it takes the errors start popping up, and it becomes difficult for the organization as well to keep a track when such a huge volume of data starts flowing. So don't wait for the last minute. Just before beginning your holidays, furnish all those proofs to your employer organization, basis which they can, because they also would typically, an organization also typically takes 30 to 45 days, depending upon the how big the organization is in terms of the headcount wise, to verify those proofs. So that is also another mind-boggling activity that an organization has to go through. So these are some of the steps that an employee has to take. But the first and the foremost important thing is planning your investments, and then once those investment has been made, basically keeping those original documents in place so that they can be uploaded to the necessary portal via which the organization can then verify those documents.
All right. Okay. Mr. Anurag, this actually leads to my next question. So far we just talked about the deductions, the exemption, the common mistakes that we might make and all of that. Another important aspect is the other income when it comes to proof of investment submission, right? So the question now is, are employees mandatorily required to report this other income? Like to their employees, it could be the bank interest or house rent, anything in that this one.
The income tax law is quite flexible on that. There's no mandatory requirement for an employee to furnish whatever earning they're making besides earning their salary income. But at the same time, if a employee is earning, let's suppose, good amount of bank interest or FD interest, at the same time, they have certain loss from the house property as well. Like typically people take house property on loan, they pay those EMIs. So the interest payment is eligible for a deduction of around 2 lakhs. So it is always recommended that all these different components are, or the information relating to these components are shared with the organization so that they can work out the final tax liability. Now, let's suppose if an employee doesn't do that, then what are the implications? So let's suppose if an employee is earning a good amount of interest income from his FDs, his interest, or capital gain as well, or rental income as well. then in such a case, the advanced taxation installments will become applicable on him. And if he doesn't discharge those advanced taxation, then there's an interest implication. In order to avoid that, or to avoid the hassle of working out the advanced tax installments every quarter, I think a recommended way is to furnish the proof of this income along with if any TDS has been deducted to the employer organization, basis which they will factor this income in and work out the final tax liability. By doing this, the employee becomes saved from the hassle of working out the advanced tax calculation. And if he doesn't do that, he also avoids the interest implication, which comes in case such person doesn't deposit the advanced taxes. So the law is very clear. They are saying it is not mandatory, but it is something that it's a sort of like flexibility accorded to an employee to provide these information to the employer organization.
All right. So, Mr. Anurag, good you brought this up, like advanced tax and all of that, right? So now I would like to know what if the employee does not submit the investment proofs? Like, for example, in case employees are not able to furnish their investment proofs, so can they factor the same while finalizing their return of income?
The answer to this question is yes. Because sometimes, because of some reason or the other, the employees might not be in a position to furnish the investment proofs, or the window prescribed by the organization is closed. They are no longer able to process the investment proof. Then in such a case, the way out for an employee is to basically factor these investment proofs at the time of filing the return of income. The only thing is, because the TDS would have been deducted, there could be a refund situation. So they will have to ensure that whenever they are filing the return of income, they're furnishing their bank account details in a correct manner, so that as and when the refund gets processed by the income tax department, it gets credited into their bank account.
Great. Thanks for letting us know that, Mr. Anurag. While we continue our discussion, dear attendees, start putting across all your questions in the Q&A option of Zoom control panel. In very few minutes, we'll be ready to take up your questions. All right. So in the meantime, Mr. Anurag, I would like to know what happens on the other side now. So far, it was all about employees, what employees can do, what they cannot do, what happens. How about employer now? Like, is there a requirement on the organization to verify or audit the investment proofs? Like, further, if we go, what are the typical challenges faced by an employer in the organization while verifying these investment proofs?
Yeah, that's a very valid question, and I think this is something that many organizations are facing nowadays. And to answer your first question as to whether an organization is required to verify, to audit the investment proofs, I would say verification requirement is there. Audit requirement is not there. So an organization is not required to basically start conducting the audit because it is not practically feasible for them to start auditing each and every investment proof. But verification of the investment proof is required. So the person who is verifying these records, they will first have to say or understand that what is the declaration which was filed by an individual, whether whatever proof that the employee has submitted matches with their declaration or not. Let's suppose it matches, fine. But then also have a look at what kind of proofs have been submitted by that individual. Now, the person who is verifying all these requirements is not required to enter into a very detailed audit of these proofs, but basically whatever documents have been furnished by the employee, that at least should pass the smell test. And when I talk about the smell test, just basically prima facie, it should not appear that these proofs are not valid. A typical example I would give to you is, let's suppose if a person is verifying those records and he comes across that there has been overwriting on the receipts or the acknowledgement, there is some tampering with it, then obviously he can say, okay, fine. He is not satisfied with those proofs and he has the liberty to basically reject those claims. So it is the onus of the employer organization to do that. The reason for that is because if a person doesn't verify it, or if on a prima facie he knows that the document is wrong, this is a wrong claim and he passes it, then the income tax department or the TDS department whenever they do a surprise check, they might come across this particular document and they might raise an objection on the employer organization. And then there is a implication of the employer organization for lesser deduction of taxes. So all in all, verification is required, audit is not required.
All right.
The second part of the question that you raised was, what are the typical challenges? The typical challenges, I would say, almost 90% is around the quality of the proofs which is submitted by the employee. It becomes very difficult for an organization to verify those proofs. Sometimes these are proofs which are not legible. It is very difficult for the person who is verifying to basically read those documents, because sometimes they are printed on a thermal paper and the printout becomes faded over a period of time. The second is non-timely submission of the proofs, and it puts a lot of pressure on the verifier person to basically process and accept or reject the claim. The third is, what I have seen is many organizations don't frame a proper policy around what kind of documents are required to be submitted. As a result of which, there is always a lot of confusion and a lot of discrepancy, because normally verification might be done by a team of people. And because in the absence of the policy, one person might be accepting the claim and the other person might be rejecting the claim, even if the documents submitted are the same. To give you an example, typically when you are verifying the HRA claim, there are certain documents that one needs to examine, like the PAN of the landlord, the rental agreement, whether that rental agreement matches with the rental claim or not. And then there are rental receipts as well. Now, let's suppose an organization doesn't put out a very word-to-word policy around it. The employee is not clear. They may not furnish the rental agreement, as a result of which, if the verifier is a knowledgeable person, he might reject the claim. But if the verifier is not a knowledgeable person, he might say, okay, fine. It is as long as the rental receipts are there, he's fine, and he will pass those claims. So these are some of the typical organization that typical challenges that I've seen organizations facing a lot.
All right. Yeah. So also, Anurag, my last question now. We understand that this POI submission is year-on-year activity, right? So for how long any organization should maintain such proof documents?
Yeah. So your question has got two parts. One is how long the employee has to maintain the documents, because let's suppose if an employee has not furnished the investment proofs to an employer organization, he basically files the return of income and then furnishes those investment proofs. Anyways, the employee is required to maintain those documents for a period of at least 7 years. Similarly, in organizations, from their own perspective, are also required to maintain the documents for a period of at least 7 years, because this is the time frame which is prescribed under the income tax law, within which the audit or the scrutiny can be conducted by the income tax department.
All right. So I think it was wonderful talking to you, Mr. Anurag. Thanks for sharing all these insights with us. And I'm sure our audience has gathered a lot of information through this. So I would now like to take up audience questions. I can already see they have been lined up. Yeah. So I'll just go with the first one. So one of our attendees would like to know, can we allow political contribution as deduction, or they can directly claim while filing the returns?
See, political contributions, and in this regard, my suggestion is always refer to a master circular which is issued by the Central Board of Direct Taxes. So that's a very, very good document that every year Central Board of Direct Taxes publishes, which is applicable for that particular financial year. So whenever an organization goes through the dilemma of whether to allow such investment proofs or contribution proofs while withholding taxes, then they always should refer to that particular document. As far as I am aware, to the best of my knowledge, political parties' contribution should not be factored in while at the time of calculating the withholding tax liability. But again, this is something that one may need to check in the master circular document. But definitely, in case an organization doesn't allow, then the employee at the time of filing his return of income can lodge this deduction amount and then claim it as a deduction while computing his final taxes.
Mm-hmm. Sure, Mr. Anurag. Thanks for answering that. I'll move to the next one. This is something related to HRA exemption. So,
Hmm.
one of our attendee would like to know what can be the appropriate documents to be asked for HRA exemption.
Yeah, as I was telling earlier, HRA is one of the most popular component because many employees avail this particular amount as a exemption. Uh, First and foremost, organization should frame a proper policy around what are the kinds of document that is expected in order to process the HRA claim. In terms of the documents, one needs to ensure, as I was telling earlier, HRA rental receipts, rent agreement, PAN of the landlord. These are something which is mandatory required to be procured from the employee in order to basically process the HRA claim.
All right. I hope that answers the
At the
question.
same time, and it's just at the top of my head, at the same time, many times we have also seen uh, people having rental accommodation as well as a self-owned occupied property as well. So at the same time, the organization should, in such a case, take a proper declaration from the employee that he's staying in a rental accommodation and he was not able to basically occupy the his own house property because of the reasons which is prescribed under the income tax legislation. So there is a certain declaration also which can be required by an organization.
All right. Okay. So I hope that answers the question. So next question is about the loan for EV car. I think you
Hmm.
also brought this up during our discussion, Mr. Anurag. So the question is,
Hmm.
can you please elaborate more on interest on loan for EV car, as in what documents can be taken for the same and other details related to it?
See, loan for the EV car is first and foremost, if you are planning to purchase the electric car, you take it on a loan, just like a normal car you take, and then you pay EMI. Now, EMI contains the interest component as well. So on that interest component, deduction up to a maximum of 1,50,000 is allowed under the income tax legislation. Now, as an employer organization, you need to obtain because normally what happens is, like in the case of a house property, a certificate will also be issued by the lender bank. And then basis that certificate, once it is furnished by the employer organization can process the deduction for such EV loans as well.
All right. So I hope that answers the question.
Hmm.
One of our attendee would like to know more about Section 80G.
Well, Section 80G is a pretty huge section. If I start explaining it, it might take a good period of time. But all in all, I would say 80G is another good uh, sort of like instrument for deduction. But it is a donation. It is not an investment. Rather, it is a donation to organizations. And then basis that donation or the kind of organizations that you are making a donation to, you are eligible to claim deduction. Now, the deduction can be 100% of the amount expended or 50% depending upon the kind of institution that you are making a donation to. But then there are various nuances around 80G. Government has also prescribed that wherever an organization is getting a donation, they are also required to furnish a particular statement to the tax authorities. So that is also applicable. So what they are trying to do here is they are trying to ring fence this entirety because it was usually under the garb of 80G that many employees used to furnish sort of like false claims with the employer organization. And so government is trying to ring fence it now in order to ensure that whatever claim is submitted, these are genuine claims which are submitted by an employee.
All right. I hope that helps. Next one is Mr. Anurag. Can employer choose not to deduct tax from the salary?
No, they can't. It's a legislation. It's a statutory compliance. So if the income which is earned by the employee is a salary income, the employer is paying that salary income, then there's a mandatory onus on the employer organization to deduct TDS. At the same time, they are also required to deposit the TDS within 7 days from the end of the subsequent month. So it's a mandatory obligation, can't be avoided by an organization.
All right. Okay. So our next question, it seems to be slightly off topic, but
Mm,
I'll just take it up. Maybe you can throw some light on this, Mr. Anurag. So the
mm.
question is, please share your views on what are different flexi benefits which company can provide to employees and how to manage this overall process.
See, this all comes under the compensation structuring aspect because organization has to first and foremost structure their compensation in order to make it tax efficient. At the same time, ensuring that it doesn't impose or lead to a lot of administrative burden on an employer organization. Now, if we talk about flexi benefit is nothing but a menu-based system, or I would say an option given by an organization to an employee. So let's suppose 100 is the CTC of an employee, 40% being the basic, the remaining 12% odd goes to the PF. The remaining amount is a special allowance component, which can be broken down into different flexi baskets. If we talk about flexi baskets, there is first and foremost leave travel allowance is something that can be provided. So Sodexo vouchers is there. Telephone reimbursement can be provided. Education allowance of the children is also another thing that we came across. But if we talk about the big ticket items, I would say car lease is one of the big ticket items that many organizations have now started providing, where it's an employer-owned or hired car that will be provided by an organization, and there are a good amount of tax benefits associated with it. Of course, we have seen that normally employees at a medium level or a high level are entitled to such benefit. At the same time, if the employee himself is owning a car, then there are again some deductions which can be availed on account of petrol and driver reimbursement. So again, this is not a very small topic. This requires a separate discussion. So I would advise the relevant person to connect with me, and I'll be happy to advise him on this.
Sure, Mr. Anurag. Thanks for answering that. Next question is, I think, a very common question which all of us usually have. Is income from a previous employer mandatory to consider?
See, it is not mandatory, but again, it is recommended. The reason for that is normally if you don't divulge the details of whatever you are getting from your previous employer to your current employer, then normally when you're filing the return of income, you will see that there will be additional tax payable along with the interest implication. The reason for that could be that both the employer would have taken slab rate advantages, as a result of which the amount of tax liability that would have been deposited with the tax authorities would be lower as compared to a situation wherein the previous employer detail would have been furnished to the current employer. So again, not mandatory, but it is something that I always say a person who is changing jobs to furnish to their current employer so that they can factor that in and work out the final tax liability.
All right. Okay. So with this, I'll move to the next question. So I think this is a very interesting question, Mr. Anurag. So the question is, my organization has opted for new tax regime, so I don't have to submit any proofs. So in that case, what is the onus on me?
Can you repeat this question? I was not able to get it.
Okay. So the question is, my organization has opted
Hmm.
for new tax regime, so
Hmm.
I don't have to submit proof. So in
Hmm.
that case, what is the onus on me?
Now, this is a trick question because organization can never opt for a new tax regime. It is the onus or the flexibility accorded to an individual to decide whether he or she would like to opt for a simple regime or the existing tax regime. See, there are benefits to both the regimes. If one opts for new tax regime, then there is lower taxation rates applicable, but at the same time, the person loses out on deductions as well as exemptions. So one has to take a proper sort of like analysis around it, that which scheme would be beneficial to him or her, and basically then choose that option. Normally, when a company is processing the payroll, they at the start of the year itself, or if a person is joining in, this is the option exercised by the employer organization work out the tax liability. So I would say the question is a trick one because the organization cannot opt for a new tax regime. The individual has to do that. Once he or she opts for a new tax regime, then they would be the tax withholding would be done on the rates which are applicable for the new tax regime.
All right. Okay. So I hope that answers the question. I'll go to the next question, Mr. Anurag. Like you already explained us about HRA, one of our attendees would love to know about LTA now. So the
Hmm.
question is, please explain in detail about LTA and proofs that need to be submitted with respect to it.
See, LTA is leave travel allowance. First and foremost thing is, as I was telling earlier, the organization first have to structure a proper policy around LTA. That what are the conditions that needs to be satisfied in order to get LTA benefits. Secondly, the LTA is allowed only for travel within India. So for people who are planning or who are thinking that, okay, if I go abroad, I will be entitled to LTA, that is something not available under the present income tax regime. In terms of the proofs, if the person is going via it's basically first and foremost, they have to take a leave because it is leave travel allowance. So first and foremost, you need to be on a leave. The second important thing is plan your travel, and when you're planning your travel, uh, submit these proofs like air tickets or the train tickets to the employer, and basis that only they would be processing the claim. Normally, LTA, the organization fixes a hard limit on the LTA. There is no limit as per the law which is prescribed. What they say is that whenever you get a LTA allowance, if you furnish those claims, that will be treated as a tax-free income. It is allowed in a block of 4 years. So within 4 years, you can plan your travel. And then at least I think it is 2 travels that is allowed within a block of 4 years. And if you're not do not avail those travel, then it can be carried forward. One travel can be carried forward in the next block as well. So because there are nuances and intricacies involved around the LTA benefit, I always recommend organization to first and foremost frame a proper policy around LTA. Tell the employees that what are the documents that they need to furnish, what are the do's and don'ts of availing this particular benefit, and then once they furnish the proofs, allow such claim, and then work out the tax liability.
Sure. Thanks, Anurag, for answering that. So the next question is it mandatory to submit the original investment proofs to the employers?
No, it is not mandatory. And nowadays, many organizations have started saying you just upload the scanned version and that should suffice. But the original investment proofs, as I was telling earlier, the employee has to maintain it, keep it as a part of his records, because in case the employee is audited by the income tax authority, then they would require these original documents to ascertain the genuineness of the claim.
All right. Okay. So the next question is about Atal Pension Yojana. So one of our attendee would like to know that a few say that Atal Pension Yojana is only for unorganized sector. So is there any issue while receiving pension after 60 years?
Unfortunately, I haven't come across this particular scheme. Might have to park this question, and I'll address it subsequent to this session.
Sure, sure. Thank you so much, Mr. Anurag. I'll move to the next one. So what is the procedure for uploading and verifying proofs in Great HR where employees upload and where employers verify? So dear attendee, I think this is related to our application Great HR. So what I would suggest is before we end the session, I'll be sharing a mail ID with all of you. Probably you can just write back the same question to us on the mail ID that we'll be sharing, and one of our relevant team members will soon get in touch with you and help you understand the entire process. All right. So I hope that helps for now. Anurag, I'll go to the next one. Can employees claim both HRA and housing loan under Section 24?
Yes, it can be claimed, provided the person was not in a position to occupy the self-occupied property, and he is staying in an accommodation for which that person is paying the rent. So it could be typically, I'll give you a plain example. Let's suppose if a person has taken a self-occupied house property in a location like Jaipur, that person is now working in Gurgaon. Obviously, because of the work reasons, he wasn't able to occupy his Jaipur property, and now he's staying in accommodation, which is a rented. So in this case, he can avail both HRA as well as a housing loan under Section 24.
All right. Okay. So I hope that answers the question. Next one is Anurag, can government employee who is eligible for old pension scheme claim NPS under section 80 CCD 1B?
Can government employee who is eligible for old pension scheme can claim NPS? See, if that person is a government employee, then obviously they would have been enrolled under the national pension scheme. If we talk about national pension scheme, there is an employer contribution and then there's an employee contribution. There is a 1 lakh overall limit on account of the contribution which is made by the employee. But at the same time, if there is some additional benefits or additional contribution which is made by an employee, then there's a further deduction of 50,000 which is allowed to an employee, including the government ones as well. So the answer is yes. If he's eligible or is he covered under the national pension scheme, they can claim a deduction under 80 CCD.
Okay, great. Anurag, we also talked about medical expenses while we were discussing, right? So one of our attendees would like to know more about this. And also they would like to know what are the proofs required to collect for this same. So basically, what are the medical expenses that are allowed for deductions? So this is the question.
So this is something that not many people are aware. Obviously, there has been a change in law. So earlier what used to happen was there was a 15,000 limit on account of the medical reimbursement. So employees used to spend, in case they used to spend on medical expenditure, they used to submit the bills and they used to get a exemption of 15,000 from their taxable salary income. Now that scheme is gone, that 15,000 limit is gone. Instead of that, there is a standard deduction of 50,000, which is applicable for salaried employees. So medical expenses, plus at the same time, there was one transport allowance as well, which was allowed. Now both these components have been removed. And instead of that, there's a standard deduction of 50,000, which is allowed. Now, let's suppose if a person is still incurring a medical expenditure and that person is a senior citizen, first and foremost, and secondly, they haven't taken any medical insurance policy. Then in such a case, if there is any medical expenditure which is incurred, that is covered under the 80D. I think the limit is around 50,000 for that senior citizen. So up to a 50,000, a deduction is allowed for medical expenditure. That is point one. The second is if you're incurring any expenditure on account of preventive health check, right? So that is also allowed up to an extent of 5,000 for both the family members, employee family members, as well as the parents.
All right. Also, there's the extension to this question, Anurag, whether medical bills for buying capsules, lotion, etc. can be considered as POI under Section 80D, that is preventive health checkup.
No, I would say not. The reason for this is when we talk about preventive health checkup, it is basically you are basically getting yourself checked by a diagnostic agency. So it is. So let's suppose if I'm going in for a health checkup, I'm getting my blood pressure checked, I'm getting all those vitals checked, then it would be termed as a preventive health checkup. If I'm going to be buying lotions or anything which is a cosmetically related, then per se it should not be allowable under the income tax legislation.
All right. Mr. Anurag, we have one good question here. So one of our attendees would like to know, some of the employees are working from home. So can they submit rent paid to parents as investment proof?
See, rent paid to parents, again, this is a very question that many people ask. Many people have this practice because of the work from home situation. Many people are working from home and have started paying rents. There was one case wherein one spouse was paying rent to the other spouse as well. This question has also been addressed in our judicial rulings as well. And this is something which has been allowed under the income tax legislation. So wherever a person is paying rent, that rent is commensurate with the or I would say that rent is paid under an arm's length mechanism. Then in such a case, and plus at the same time, whatever rent is being received by the other person or the parents, they are basically disclosing it at the time of filing the return of income, then it is allowable.
All right. So I hope that answers. So next question is, Mr. Anurag, can we consider loan for home renewal as POI?
Loan for home renewal. I think so. It can be considered, provided a loan has been, loan has been taken for renewal of the house property. It can be considered as a proof of investment, and whatever amount of interest is being paid, that should be allowable as a deduction.
All right. Okay. Next question is employees submitting the proof for mutual fund investments from third-party aggregator and not from mutual fund statements. Actually, it is difficult to justify such investments. So can we accept these as proofs? First one. Second question is rent agreements created with current date but they're effective from 1st April, which shows that it is created with an intention of claiming HRA exemption. So please suggest whether to accept or reject such agreements.
See, if I talk about the question one, where an employee is submitting proof of the mutual fund investment from third-party aggregator, if that third-party aggregator is something which is certified, because obviously the third-party aggregator also have to take certain licenses as well. And if this is an actual investment made by a person, so then in such a case, I believe such investment claims should be allowed. Secondly, wherever, and as I was telling earlier, wherever you feel that the proofs which have been submitted by the employee doesn't pass the smell test, which is the case appearing in the second one, then in such a case, the employer has the liberty to basically reject those claims and state the reason for rejection. Asking the employees that if they would like to submit a proper document, then only the claims will be allowed.
All right. Okay. So also, dear attendees, I understand that the questions are pouring in. A lot of questions have lined up here. But due to interest of time, if we fail to take up your questions, please don't be disappointed. There are various different ways to reach out to us and get your questions answered. But we are trying our best to answer your questions. And if we again happen to miss out on any of it, you can also write back to us on the mail ID that I'll be giving you in the end of the session. All right. So with this, I'll continue for a few more minutes before we conclude the session. Mr. Anurag, next question is, can employer deduct the tax less than required to be deducted? Are there any consequences of that?
So let's suppose if 100 is the taxable salary income, 30 is the liability. So 30 is what the employer would need to deduct and deposit with the Indian tax authorities. Now let's suppose they don't deduct, they deduct only 20. Then there's a shortfall of 10. And because of that, the revenue wasn't able to get that rupees 10. In such a case, there's a lesser withholding of taxes. In which case, if the tax authorities conduct a scrutiny on the employer organization and they find that, then there will be interest implication on the employer organization, and there could be a penal implications as well. At the same time, if there is a lesser withholding of taxes, then there's a greater chance that corporate tax deduction of those claim of those salary payments might also get disallowed. So there's a greater amount of con to this entire approach. So organizations are always suggested to do a proper withholding and not succumb to the request of the individual employee, wherein we have seen that many employees approach the payroll department and tell them that, look, do a lesser withholding because I need to plan my affairs and so on and so forth. Not to succumb to those requests and do a proper withholding, because there's a greater amount of risk or exposure on account of lesser or no withholding.
All right. Okay. So I hope that answers the question. Next one is about the FBP, Mr. Anurag. So the question is, what kind of bills we should attach under vehicle maintenance, which comes under FBP?
See, the bills under the vehicle maintenance are first and foremost the petrol bills, the drivers' salary receipts. In case repair and maintenance bills are also something which is normally accepted by the employer organization. In case insurances are there, then insurance can also be submitted as a proof of those expenditure.
All right. So the next question, I think, Mr. Anurag, you have partially answered this. There's only the other part, maybe we might need your help. So the question is, what are the supporting documents to be collected for home loans and home rent?
See, for home loans, the documents that need to be collected are basically, first and foremost, the interest statement from the banks. Now, normally what happens is by the end of the or before the end of the fiscal year, the banks are not able to issue the final statement. Then in such a case, there's a provisional income tax certificate which is issued by them. So even that should suffice if that provisional interest certificate is there. Secondly, in order to ensure that the property has been now occupied, so there's a OC certificate which is normally issued by the developer. So normally your employer organization also likes to get that as a proof as well, in order to ensure that the person is occupying or the person has now got the ownership of that property. At the same time, whomsoever has lended, like the lender organization or the banking or the financial institution, their details are also needed for the purpose of validation of those claims. So these are some of the few documents that an employer organization should obtain. Home rent, I think I have actually covered, so we don't need to deliberate on the same.
Sure. Yeah. Also, Mr. Anurag, next question is from the employer perspective. So as an employer, can we save the POI documents of employees in the soft copies, or do we need to have the hard copies?
I don't think nowadays many organizations have started keeping the soft copies, and that is something that is also now with the faceless assessment and all those things. Tax department has also started accepting the soft copy of those documents. So I don't think there is any real reason for an organization to now maintain the hard copies of these documents.
All right. Okay. So I hope that answers the question. Next one is about the LTA with the cumulative amount. So the question is, can employee claim LTA at the end of the block year, for example, 2025, of the cumulative amount?
He can, because normally what happens is organizations tend to carry forward that LTA claim in case a person is not able to claim that amount. So there are two approaches which is followed by an organization. One is they don't carry forward that amount, and they basically pay that amount as a ex gratia payment by the end of the fiscal year and then tax it wholly. The second approach is organizations also tend to carry forward that amount. So let's suppose 1 lakh is the amount of component of LTA. 1 lakh is not utilized by the employee, so that is carried forward to the next year. Now let's suppose at the end of the T plus 4 years, there's a 4 lakh amount which is there, which is blocked with the organization. Then the employee has to submit a claim of 4 lakhs in order to basically get that exemption. But again, 4 lakhs is a pretty big amount. It all depends upon the kind of limit that the organization would have imposed. Anybody who's traveled within India, unless until he has got a very big family, then only in such a case the 4 lakh amount can be exhausted. Otherwise, I haven't come across such amount of claim. But technically speaking, yes, this is something that is doable and is allowed by the organizations.
Okay, so dear attendees, I understand that we have already exceeded our time, but I'll just take up one last question for today. I think, Mr. Anurag, this is somewhat similar to what you have already answered, but in case if there's something missing, probably there is the opportunity for us. It's about HRA again. Because of COVID situation, people are working from home. So in that case, the work location and home location are different. So can we accept this?
See, work location, it can be a case that the person is working in, let's suppose, I'll pick up a location like Gurgaon. He was working in Gurgaon. Now, because of the COVID, the person is now remotely working. Or I would like to put it a little bit differently. Let's suppose the work location is a metro city and the person is sitting in a non-metro city. Then in such a case, whether the HRA claim has to be on a metro city or a non-metro city. That is the sort of my understanding on this question. I would say where a person is staying in a non-metro city, that person is paying a rent on account of that, then that 40% limit will be applicable. If the person is staying in a metro city and paying rent within that location, then 50% limit will be applicable.
All right. So I hope that is the question. I think it's now time for us to conclude this session. But before that, like I promised already, here is the great drive for all you attendees here. Please don't be disappointed if any of your questions are unanswered. You can always reach out to us either through our Great Drive community or the email ID rakigautam@greatofgreatip.com. So before I end this session, thank you, Mr. Anurag, for such an insightful and knowledgeable session. And I'm sure our audience have benefited a lot from this session. And also, I would like to thank our attendees for attending this session and for making it a huge success. If you have any more questions, please feel free to write back to us on email ID that you can see on the screen. That is rakigautam@greatip.com. With this, I'm now going to end this session. While in the meantime, we'll see you in the next session with another interesting topic. Till then, have a great time. Stay safe. Thank you.
Thanks, everyone. Thanks for being a wonderful audience. And thanks, Rashmi. Bye.